This is not financial advice. I'm recording my thoughts about Meta. It's currently trading at about $625. In this video, I'm going to show you the 2029 valuation. In doing so, I'll cover their business model briefly, then I'll show some numbers, and finally, I'll do a valuation. About 2 years ago, I made a video on Meta when it was trading at $94. As you can see on the screen, this is the valuation that I've shown for 2025, in which I estimated $377 price target. In other words, 300% gain. I did purchase the shares when I made this video, and I am up about 500%. So I made a very good gain on Meta. Quickly get started with the business model. As you can see on the screen on the left, Meta has 4 big platforms: Facebook, Instagram, WhatsApp, and Messenger. The monetization on Facebook and Instagram is really good, and they did not find a very good way to monetize WhatsApp or Messenger significantly at the level of Instagram. But most of the revenue comes from advertising. Let me now show you some numbers. At $625, the market cap is $1.59 trillion. For the past 12 months, they made about $169 billion of revenue. That's a price to sales of about 10. And their PE is about 26 now, and the forward PE is estimated to be 24. They also pay a dividend of 0.34% or $2.10 annually. When I look into their growth rate, it's not very linear. As you can see on the screen, they grew about 22% in the most recent year, and the year prior they grew about 15%, and in financial year of 2022 they had negative growth. So there's no particular trend in the growth rate. Let's now look at their margins. Meta has incredible margins. As you can see on the screen, they have 80% plus gross margins on an average for the past 4 years, and their net profit margin is varying, but they are capable of achieving north of 32% net profit margins with the gross margin of 80% plus. So these are amazing margins. Let me now quickly show you the balance sheet. They have close to $77 billion of cash and cash equivalents, and they have a total debt of about $49 billion. So they have net close to $30 billion of extra cash. With respect to shares outstanding, even though Meta makes a lot of money, they're not buying back shares as aggressively. You can see on the screen, they had 2.62 billion outstanding shares back in 2023, and now they have 2.61 billion outstanding shares. They barely bought back, and this is due to the fact that they are making a lot of capital expenditure investments in both AI and their core business. Let's now look at some highlights from their most recent quarter earnings. As you can see on the screen, they are expecting first quarter 2025 revenue of about 39.5 billion to 41.8 billion. That represents a growth of 8 to 15% year over year. That's quite a range, but the average is about 12%. And they are saying that on a constant currency basis, they would have grown much faster, but since dollar is much stronger compared to a lot of currencies around the world, their growth is limited to 8 to 15%. So that gives us an idea of what they are projecting for 2025. They did not give the full year 2025 guidance, and they are saying they can make anywhere between 60 to 65 billion dollars in capital expenditure. So most of their cash and whatever profit they make this year will probably go towards that. So we cannot expect too many buybacks. So let me now look at the valuation. I'm going to show you the valuation. As usual, I'm going to show 2 cases, one with reasonable assumptions and the other one with great execution. Before I show you the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Meta. As you can see on the screen, for financial year 2024, they made about $164 billion of revenue, and I'm estimating growth rate of 12% in the reasonable assumptions case and 15% in the great execution case. You can say in the most recent quarter, they're saying they can grow anywhere between 8 to 15% in the Q1 of 2025. So midpoint is about 12%. And I understand that the ad market, the digital ad market, is actually growing at about high single digit percentage year over year for the next few years. Meta, being the leader, will have to grow faster than that. And they're also investing a lot of money in their core business. They're also reducing their operating expenses, right? So this capital expenditure will convert to further growth. At least that's what they're anticipating. That's why I'm assuming 12%. in the reasonable assumptions case. In the great execution case, I'm estimating 15% because, in my opinion, they will find some ways to monetize their AI effort. Currently, their open source Llama large language model is there, and because of these high investments in AI as well, they will find a way to monetize that, and they can probably get to 15% revenue growth rate. So I'm estimating a net profit margin of 32.5% in the reasonable assumptions case and 35% in the great execution case, with their gross margin of 80% plus, and them being very cautious about their operating expenses and controlling them. These margins are not very difficult to achieve. And I'm estimating a multiple of 30 in the reasonable assumptions case. Currently, they're getting close to 26. But in my opinion, once they get more and more efficient, increase their margins, and have high growth rate, they should easily get 30 multiple. And 40 multiple in the great execution case when they monetize their AI as well. So with that, the market cap for Meta will be 2.8 trillion in the reasonable assumptions case and 4.6 trillion in the great execution case. Currently, they have close to 2.619 billion outstanding shares. They are barely buying back their shares because they're making a lot of investments in the capital expenditure, wherein they are investing both in their core business as well as AI. So that's why I barely put 0.5% buyback. With that, they will have 2.549 billion outstanding shares by 2029. That will result in $1,105 stock price in the reasonable assumptions case by 2029. And in the great execution case, it would be $1,812. So that represents 77% gain in 5 years in the reasonable assumptions case for Meta. And that is very attractive. That's going to beat the index. And in the great execution case, if they can find some ways to spur growth in their core business and monetize AI using their 65 billion dollars of capital expenditure, which I think is likely, they can get to 190% gain from the current stock price of $625. In summary, I'm looking at a 77% gain in the reasonable assumptions case and 190% gain in the great execution case. So, in my opinion, it's a buy. And I want to further clarify that this is not financial advice. Please don't buy because I mentioned that it's a buy. Please do your own due diligence. So for my personal journey, since my cost basis is $100, it's very hard for me to add at the current price. If I did not have a position, I would have probably added at $625 because the 77% gain is attractive to me in 5 years. But since I already have a position, I will actually look for at least 100% gain in 5 years. For that, the stock has to fall to $550. So if Meta falls to $550, I'll consider buying it. Otherwise, I'm going to stay away from this stock and keep my current position. Let me know your thoughts in the comments. Thank you so much for watching.